Hello there, crypto lovers. Welcome to the XRP news today. Okay, so quick question for you. You ever notice the timing with these guys? Like, the richest men on the planet never get bullish while you're up. Never. It's always after you've been bled dry for months, after the average guy's already rage quit. That's when the suits suddenly find their optimism. And right on schedule, here comes Larry Fink, the guy running BlackRock, sitting down on live TV and basically handing us the whole playbook without even realizing it. Because yeah, BlackRock just flipped bullish on crypto again. And man, when you line up when they flipped with everything that's stacked up right behind it, it stops looking like a coincidence and starts looking like a script. These big money players have spent months shaking retail out, torching portfolios, and quietly moving everything on chain while it happens. So let me just walk you through the whole thing piece by piece, and you can decide for yourself what it adds up to. Real quick though, chart check, because the setup matters for everything else I'm going to say. Bitcoin's still stuck grinding sideways around 64,000, just chop, chop, chop. And honestly, I wouldn't be shocked if we get one more flush before anything good happens. If Bitcoin dips, XRP's coming along for the ride. No way around that one. And XRP's sitting around $1.10 as I'm recording this. Now, I want to be careful here. Okay, none of this is a guarantee, but a retest of that low around 60.2K, that's the move I've got penciled in. And here's the weird part. That retest might actually be the best thing that could happen to us. There's an inverse head and shoulders slowly forming on this chart, and a dip like that could be the exact piece that confirms it. You know how a normal head and shoulders is bearish, right? Flip it upside down, you get the mirror image, genuinely bullish structure. If this thing completes, the level I'm glued to is 67,000. Get a strong reaction above that and boom, 75,000's back on the table. Maybe even 82,000 again. So yeah, that's my read. One more shakeout, then the door swings open, which, I don't know, lines up a little too neatly with BlackRock suddenly getting friendly. I'll get to exactly what Fink said in a minute, I promise. But first, come rewind with me. Go back to October of last year. From that point till right now, this market has done basically nothing but bleed. Sell-off, little bounce, bigger sell-off. If you're a retail holder, it's been miserable, and I'm not going to sit here and pretend it hasn't been. Yeah, it has. Now, here's where it gets almost insulting. So, Chiron over at No BS Crypto put up a post on X tracking what he calls the bear market progress. And dude, you have to see this list to believe it. While your portfolio was getting torn apart, this is what was going on behind the curtain. Ready? Morgan Stanley opens crypto to all. A whole wave of ETFs launch. Vanguard opens up crypto ETF access. The CFTC opens up regulated spot crypto, then opens crypto collateral pilots on top of that. The DTCC tokenization service gets authorized. 5 crypto trusts conditionally approved. Visa launches USDC settlement. BNY launches tokenized deposits. CME Oldcoin futures go live. BlackRock staking ETF launches. The SEC and CFTC define crypto taxonomy. NASDAQ tokenized trading approved. Coinbase Trust conditionally approved. Morgan launches a Bitcoin ETP. Schwab announces a spot crypto rollout. Then the DTCC sets its tokenization launch. A Senate panel advances clarity. The DTCC selects Stellar Rail. Morgan Digital Trust conditionally approved. UK stablecoin rules take shape. Clearstream adds 6 old coin rails. And then Morgan advances Solana and Ethereum ETFs. Like, read that back. That's the biggest names in finance, one after another all year long. And the price went down the whole time. So what gives, man? Stocks are ripping to fresh all-time highs. Crypto's face down in a ditch. Is that manipulation? Do the big players just want you gone? And I'll be straight with you. I think screaming manipulation at every red candle is kind of a cope, and I try to catch myself before I do it. But at the same time, I can't unsee what's sitting right in front of me either. Everything this community has researched and argued about for years, like all of it is getting validated by the biggest institutions on earth. At the exact same moment, the market's getting carpet bombed. Both things happen together. That part's just the record. That's not even a take. And think about who's actually left standing. Out of all the retail that was here at the highs, how many are still here at these prices? Way less. And a good chunk of the folks who walked away, they're never coming back. Ever. Which sucks, genuinely, but it also happens to line up perfectly with what these elites want. You getting rich was never part of the plan, guys. And nobody sits higher on that food chain than BlackRock. BlackRock officially becomes first investment firm in history to surpass $15 trillion in assets under management. 15 trillion, like dollars. Just sit with that for a second. First firm in history to touch it. And look, nobody needs an introduction to BlackRock at this point. They're the biggest name in the entire game. So when Larry Fink walks onto CNBC, people listen. And here's what came out of that little appearance. BlackRock CEO turns bullish on crypto, $15 trillion. BlackRock CEO Larry Fink says crypto has more stability at these levels with less leveraged players. I'm very bullish on the market over the next 12 months. You catch that phrase? Less leveraged players. Interesting choice of words there, Larry. Where'd all those leveraged players go, huh? Oh, right. October 10th, that monster liquidation cascade that sent Bitcoin from 126,000 straight down to 80,000 in a blink. Leveraged traders got deleted off the board, and now, magically, the market's all stable. Sure it is, buddy. Give me a break.
But hang on, before I roll this clip, one more piece of history you need in your back pocket. The last time BlackRock got this loud and this bullish, their ETF launch. Pull the chart up with me. January 10th, the approval drops. Full official announcement. It's happening. And what did the price do? It dumped hard. And then, same way good news always seems to lag in this market, boom, it absolutely ripped. So now Fink's out here getting bullish again, and I'm going, wait, are we about to watch that exact same movie replay? Dump first, launch after? It's very much on my radar, put it that way. Watch this.
There is no question, as I said it in earlier times when I was here, I was always worried about the leverage in Bitcoin and crypto. There was too much leveraged players in it. That's why we had the washout, and I think there's more stability at these levels here. But no, we don't see that much implicit leverage. For the scale of the capital markets today, the leverage is not as large. I mean, that doesn't mean there's not pockets. But no, I, as I said in my prepared remarks this morning, I'm very bullish on the markets over the next 12 months. I think the technological revolution is going to power better margins for more companies. I mean, think about BlackRock. We've raised, our margins increased by 260 basis points over the last 12 months. A lot of it is using more and more technology.
So there it is, straight from the man's own mouth. Leverage was always the thing they kept pointing at, right? That was their big problem with this market. The one thing they kept flagging. Well, would you look at that? Problem solved. And look at exactly how it got solved. Retail took the hit. Right on cue, right before the next phase kicks in. And what's the next phase? Oh, just this. Wall Street tokenizing everything. JPMorgan, BlackRock, and Goldman moving to tokenized stocks and treasuries. That's the entire financial system changing clothes, basically. And don't stop there, stack this next headline on top. Banks unveil blockchain network as stablecoin payments reach 33 trillion. And who's behind that one? JPMorgan, Bank of America, HSBC, Citigroup, Wells Fargo. The banks, dude. The same institutions that spent a decade laughing at this stuff are now building on it, shoulder to shoulder with BlackRock, Goldman, and Charles Schwab. Every last one of them piling in at the same time. Which drags me right back to that MoonPay post from April. You remember this one? The institutions are literally coming for your coins. That line was tied to the launch of SODOT, their institutional platform. And honestly, as a sentence, it's aged perfectly. These players do want your coins, just not at your price. They don't want them while you're euphoric and holding with conviction. Nah, they want them after the wipeout, at the lows, pried out of tired hands. Wipe first, buy second. And that's the exact sequence we've been living through this whole stretch. Now, this next part, maybe it's me being biased. Maybe it's even a little cope. I'll own that up front. But my brain keeps circling back to the big bankers, because they've had the Clarity Act in a chokehold for the entire year of 2026 so far. And look at where things stand right now. Democrats calling the Clarity Act a corrupt bill and a threat to vote against it. 3 U.S. senators say they will not support the bill unless it includes an ethics rule preventing officials from personally profiting from crypto. This comes after Trump disclosed over $1.4 billion in crypto income last year, his largest source of income. Without enough Democratic support, the Clarity Act may struggle to clear the Senate's 60-vote threshold. And I'd put money on this next bit, honestly. Go pull the donor records on some of those anti-Clarity Act Democrats. Go see where the checks come from. I'd be stunned if there aren't some major banking associations tossing money their way. Meanwhile, this bill's been dangled in our faces for months. So close, guys. Days away, guys. And then what? Delayed. Delayed again. And again. And again. You know what I think that actually is? A tactic. Straight up psychological warfare. They know clarity is the unlock for this whole space. So if you wanted to smother every last drop of optimism around crypto, the cleanest way to do it? Hold that unlock hostage till the exact moment you're ready for markets to pump again. And judging by what's unfolding in front of us right now, every single big bank falling into formation, every major Wall Street name taking its position, and Fink on live television saying he's very bullish on crypto over the next 12 months, I'd say that moment's getting close. Real close. So where does all that leave you and me? Are we being manipulated? In my opinion, yeah. Do they want us rich? Not a chance. But here's what I keep coming back to, and it's honestly why I'm not rattled. The XRP community specifically has survived way worse than this. We went toe-to-toe with the SEC starting back in 2020 all the way through 2025, and we won that fight. We took years of pain and came out the other side anyway. So this stretch, please, we can survive this too. They're going to keep playing games with this market. They're going to keep trying to rattle us loose. But after holding through some of the ugliest chapters in crypto history, and XRP holders know those chapters better than anybody, I'm not handing my bags over now. Not to them, not at these prices. All right, your turn. Straight up, are you letting them shake you out? You've done the research. You've watched this play out for years. So knowing everything you know, are you seriously about to hand your coins over to these guys right before the biggest moves this market's ever seen? I doubt it. But hey, tell me either way. Drop it in the comments. I read those things. I really do. And if this video did anything for you, smack the like button on your way out, hit subscribe, ring that notification bell, all that good stuff. Because the content's free and there's plenty more coming. Appreciate you watching. Catch you in the next one.